So just about a year ago, I was walking around the floor of a trade show in the resource and mining industry, and I asked a very simple question to one of the companies there, which was, who else is doing a great job in your region? And they pointed straight, unanimously, to this one company here. Hello, I'm Fabi with Equity.Guru, and today I want to tell you about a gold company that is doing a very good job and maybe just a little bit undervalued, especially with gold soaring right now. Let's take a look. So this is TriStar Gold, and right when you come over to TriStarGold.com, you can see they're very clear about what they have and where they're going. It says TriStar Gold Inc. is a gold exploration and development company listed on the TSX Venture Exchange. Our 100% owned flagship project, Castelo de Sonhos Gold Project, is located in Pará State, Brazil. By the way, Pará State in Brazil is a lower tax jurisdiction for mining companies, so A+. The company has recently completed an $8 million US dollar, not Canadian dollars, so that's another jewel in the crown, so to speak, with Royal Gold Inc. They are a royalty company, very well known, with proceeds used to advance the project to a completion of a feasibility study in 2020. Okay, let's check it out. So this is somewhat up to date since we're having a crazy volatile day today in gold and stocks and everything else in between. You see here a market cap of around 50 million, shares issued of 192.8 million, a little bit on the high side. However, they still hold approximately 6.5 million, and they're also receiving 1.5 million US dollars, so it's going to be closer to $2 extra million from Royal Gold, due on the 31st of March this year, so this is going to take them up quite a bit. Share price anywhere from 27, 28 to 35 and higher. Yes, I told you it's that volatile today. And they do still have some options and warrants that are not quite in the money. Insiders and associates make up 27%. That's quite high for this size of company. It'd be interesting to know how much insiders actually own versus just associates. Institutions hold about a third of it, and a third is retail. Amongst them, US Global, very, I guess, well-known household name in the mining industry. So these are all good signs. So let's take a look at their main project, Castelo de Sonhos. It's basically the dream castle. That's what it's called here in Portuguese. So they own 100% of this project. They are not sharing it with anybody, which in this case is quite positive. They have done some testings. They have come out with a PEA, and we're going to talk about the results very soon. I want you to take a look at these things that they bring up. One of them is that the gold is at surface, so they can possibly mine it with a simple open pit, bringing the cost down, which is all great. Close to all required infrastructure, always good, especially when you're talking about Pará. It's very much the jungle, literally, very close to the Amazon. So if you have infrastructure around it, that is a huge plus. Metallurgy looks excellent at 98% recovery. Sometimes you're in basically rock that's very difficult to take apart, bringing this number down. So 98% is up there, quite good. And obviously they haven't explored the whole area. I believe they've explored about 50 to 60% of their licensed area. So there could be a lot more gold there. What do we know so far? Okay, so what we know so far is that they have a 1.1 million ounce projected with some certainty. This is not yet the highest level of certainty. That's coming between this year and next. But these financials are looking quite positive. So we're using a base case scenario of 1,250 US dollar gold price. And that will take your IRR to 51% pre-tax and 43% post-tax. I only like to look at the post-tax figure because, let's face it, we got to pay the taxes. There's no way around it. So let's take a look at the number net. NPV of 5% is a bit low. I also like to take a look at the NPV at 10%, which here with the price sensitivity, which is always my favorite part of any project, you take a look at it, and $1,400 gold used to be quite high just a couple of years ago. To have your projects based on that used to be quite high. Now it might be a little bit low, and in the coming years I think this number, it's low. I don't expect gold in the next, I don't know, let's call it 10 years to average 1400. I think that's very unlikely. But if we take that conservative number, then you're looking at $300 million worth with a high NPV of 10%. IRR shoots up to 60%, which is massive. I always like to see IRR anything from 20 and above, anything below 20, especially at such an early stage of the preliminary economic assessment. If you have the IRR sitting at less than 20, you can pretty much just forget about it, or the project is going to have to be redone, or they need to find more gold, cheaper gold at surface, etc. So most projects don't really work at this level unless they're throwing around numbers like this. So this looks really good. Cumulative cash flow net is looking like $500 million during the lifetime of the mine, which is looking like an 8-year life minimum with what they have right now. Now, the important thing that we also need to look at is the comparison of what they need to spend first in order to have the mine in the first place compared to the return on investment. So 184 million is the initial outlay that we would have in order to obtain the cumulative cash flow throughout the years. Not a bad ratio. We also want to look at the NPV here. As long as the total return with the NPV is considerably higher than the initial capex, then you should be fine. And this is quite a bit higher. I would also like to maybe see the NPV at 8%, because that's what a lot of companies would use at this point. But the fact that they're using a 10% discount here, being higher than other companies, to me just shows how conservative this management team is. It makes me trust them more, I guess, because they're using numbers that are on the edge of lowballing. So that's all good. All-in sustaining cost around $687 per ounce. Like I always say, take a look at the currency. The local currency in Brazil has been pretty much crushed in the last 6 months or so. So at the end of the day, this today is a lower price. I can almost bet on it. But for the next 10 years, I would expect this price not to change very much, either up or down. Payback being less than 2 years makes it probably a top 25% quickest payback in comparison with other projects out there of this size. So this study is being financed by Royal Gold. Basically, the study is to make sure that the gold that we believe to be there, the 1.1 to 1.3 million ounces, is actually there. They're de-risking it. They're going further into the actual costs and taking into consideration newer infrastructure. It's just a more detailed study that brings us closer to reality. Usually what you have happen is when people go into the pre-feasibility study, which is happening this year, is these numbers change, okay? And they usually get a little bit less exciting. However, if we are talking about the gold price remaining at this level, and if everything remains the same as it should, then these numbers might actually hold quite well. And on the lower end of the gold price, you still have 33%. So in order for us to go down from 33% to my minimum, which is 20, and it's not just a number that I pulled out of the hat, you know, there are other huge players like Rick Rule and people of that investing stature that won't look at anything below 20%. So we have a long way to go. Basically, everything would have to go wrong for us to not have a very, very positive, very, very good numbers here. So this here tells you a very, very interesting picture of the timeline of Castelo de Sonhos discovery. So basically in August of 2014, this is really a map of what it looked like. More gold here in 2017 at the end of the year. By September of 2018, we expanded quite a bit. According to this press release, a 35% increase in resources as the PEA was starting. And then in 2020, we are likely to get an even better number here with, expect a wider area being filled in. This area is quite known for gold mining, specifically Pará. As I told you, it is an area where you even get discounts as compared to other states in Brazil. Close to power, a highway, and also water and labor. Lots of labor available in Brazil at the moment. There's an airstrip on site, which is always great. And I just want to close this by saying that these are the guys in charge of TriStar Gold. You'll see here a couple of bigger names, for example, Dr. Quentin Hennig with Nova Resources, amongst many others. Scott Brunson of Placer Dome, North America, Placer Dome being huge in the mining space, amongst others. I am very much looking forward to what TriStar Gold is going to come out with, especially as their numbers get better and better and their costs possibly decrease with a very, very strong US dollar. If you're watching this and you're looking at the share price, it's no longer 27 Canadian cents, but it's somewhere around 30 something. It may be a blessing because just about a few hours to a couple of days ago, it was much, much higher. This may present as a very good buying opportunity. And that's TriStar Gold on the TSX.V, symbol TSG, on the OTC TSG.ZF. That's it for me today. Remember to always do your due diligence, but at the end of the day, seeing opportunities like this and letting them pass by might just make you regret it a little bit. You never know. I'll see you in the next video. Take care.